Welcome you all for the session Fundamentals and Technical Analysis. So in this unit, I'm going to explain about the fundamental analysis and technical analysis. So what is fundamental analysis and what is technical analysis? What is the purpose we are using? In this investment analysis, you are going to be analyze the characteristics of different securities traded in the market. So with those securities, whatever the securities are being traded in the market, you're going to identify the nature, you're going to identify the stocks which going to give the higher rate of return. Based on the characteristics, based on your risk-taking capacity, you are going to select the security. So in that particular basis, the fundamental and technical analysis can be used. So the next question, why we need to use fundamental analysis or where we need to use fundamental analysis, where we need to use the technical analysis. So it depends upon the requirement of investor, whether the investor looking for long-term horizon, it means they wants to make investment for longer period of time. They can choose to go for fundamental analysis. Whereas the investor wants to invest in the market for short horizon, with that they can go for technical analysis. So that's a very basic thing that the investor needs to know what type of the purpose in which the investment is done by the investor. Let's take from the point of view of fundamental analysis. For analyzing the securities based on the fundamental analysis, the fundamental factors are taken into the consideration. Those fundamental factors are classified into three major categories under fundamental analysis, which we call it as economic analysis, industrial analysis, and company analysis. In short, it is called it as EIC analysis, economy, industry, and company analysis. So with this economy, industry, and company analysis, what we are going to identify, how we are going to establish the value in which the securities are going to be purchased in the market, or what the purpose in which we need to go for fundamental analysis is going to be studied on this particular unit. So that is important to know about the fundamental analysis. So you can take what is economic analysis, what is industry analysis, and what is company analysis. So analyzing the economy as a whole, the economy factors are taken into the consideration. We can say it is macroeconomic factors are taken into the consideration. So you know about the economy. Economy is about the resources, studying of resources. We can divide the economy into two major categories of economy, macroeconomy as well as microeconomy, where the microeconomy is going to study the individual unit, where here for the investment purpose, we are going to use the macroeconomic factor. So what are the macroeconomic factors? That's important one. With the macroeconomic factor, it is going to study the economy as a whole. Economic system is going to be studied. Economic approaches are going to be studied under macroeconomic. So there are the different policies are owned by the government. With those policies, what is the impact on economy? What is the changes happens in the economy over the period of time is going to be measured with the economic factors. As you all aware, like for example of gross domestic product, gross national product, depreciation, capital assets, national income, per capita income, disposable income, inflation, unemployment, business cycle, there are such factors are highly influencing the economy. The performance of economy is being influenced. So there are inflows and outflows of funds happens in the economy, where we can say inflow of funds in the form of investments, savings, in the form of purchasing of goods and services, the inflow happens into the economy, payment of tax. The outflows are happen in the form of expenditure, different types of expenditure. Let's say for example, expenses towards the consumption of the product, investment related expenses, export import related expenses. It is related to the government expenses, like the way in which the expenses are being classified. So the gross domestic product is measured the value of goods and services produced in a particular country during the specific period of time. So like that, the example for understanding the analysis of economy as a whole, so we can be able to identify what is the performance of economy over the period of time. So with respect to that, why it is essential for us as an investment analyst, why I need to know about the economy, because economy is a base. Based on the economy only, I'm going to identify whether I'm going to make investment on this particular economy or not. Because as a whole, we are going to analyzing that. After that, we are going to identify with the economy. The performance of economy is good. Relatively, the GDP is high compared to all other countries. So you can take that particular one. With that, the contribution of GDP, what are the sectoral contribution is the second one. Maybe in the form of agricultural sector, maybe in the form of services sector, maybe in the form of industrial sector. So what is the contribution of each sectors of economy is going to be studied. So with that, assume that maybe the industrial and services sector contribution is more, where in that sector, what are the industries are performing. There are different industries under the services sector. There are different industries under the category of industrial sectors that needs to be identified. Let's say, for example, banking industry. Let's say, for example, information technology industry in services sector. Then you can take the manufacturing sector. You can take an example, cement industry, FMCG industry. You can take like what the contribution done by the different sectors to the economy is being analyzed during the economic analysis. Once we finalized what sort of industries are performing in different sectors of economy, next it is going to be moved towards the industrial analysis. So industry analysis is going to evaluate the performance of an industry over the period of time, the growth rate of industry, the contribution of industry, the penetration of industry, the type of competition is prevailing in the market. Those factors are going to add the value towards understanding, value towards identifying the performance of industry over the period of time. For that, the kind of relative strength index, relative strength analysis, the kind of different sort of analysis is being used for the evaluation. Like for example, business cycle, what sort of stage in which the industry is there in the market, like the kind of the analysis is going to be carried out. And like the company analysis, next we identified the industry. Let's say for example, banking industry, or maybe the FMCG, or maybe a IT industry, or maybe a pharma industry. So with that industry, which companies are performing, are contributing the growth of industry. You know that the difference between the company and industry, the industry is the collective business owned by the company. Let's say for example, State Bank of India, Indian Overseas Bank, Indian Bank, ICICI Bank, HDFC Bank, or together individual banks, we call it as a company. Collectively, these banking industry, these banks are representing for banking industry. So the firms which are doing similar kind of business, which we classified as industry. So with that aspect, what are the companies contributing, what is the level of contribution of those companies towards the development of industry is being analyzed under industrial analysis. Once we finalized the industrial analysis, next we'll move on to the company, what companies or what are the companies who are contributing more for the development of industrial sector is being analyzed. So with that particular thing, the company analysis is being used, where in that company analysis, it's going to be analyzed the characteristics of a company. It is going to analyzing the financial parameter and non-financial parameter of the company. Then you can take a financial parameter of the company. It is going to evaluate the key financial indicators of the company. Relatively different measures are to be deployed in order to measure the performance, financial performance of the company. Let's say, for example, it's going to measure the liquidity position of the company. It means how the company can be able to fulfill the short-term obligations, short-term requirements in the market, how the company can be able to fulfill the day-to-day obligations. That going to measure the liquidity position of the company, solvency position of the company for a longer period of time, how the company can be able to plan for their expansion, diversification, how they are going to pay off their debt over the period of time, how the company is going to plan for replacement of old machineries, replacement with the new machineries, how it is going to be done by the company is going to be analyzed. So part of solvency measures can be used for this purpose. And next is going to measure about the profitability generated by the company over the period of time. Let's say, for example, what is that a gross profit of the company, net profit of the company, how much a portion of earnings is going to be distributed, the profit is going to be distributed in the form of dividend to the shareholders, what type of dividend policy is followed by the company, the retention strategy of the company, what level the firm is being classified. Let you can take whether the firm is being classified as growth firm or a normal firm or maybe a declining firm. With respect to the nature, how the earnings is appropriated with respect to that particular company is going to be analyzed, the part what we call it as the profitability analysis. And it is going to measure the turnover, the activity of the company, the sales happens in the company over the period of time, what is a debt obligation, how they are going to collect their debts from the market for the credit sales, and how much the money is going to be repaid, what is a trade cycle followed by the company is going to be analyzed. And the turnover, the marketability of the firm, it is going to measure the market price, what the price in which investor ready to buy the securities from the market. So the way in which it is going to be measured in terms of liquidity, solvency, profitability, turnover, and marketability of securities, what is being traded in the market is one particular parameter. It is just a one parameter is going to be used in financial analysis, is going to measure the performance of the company. And like the different tools have been used for what purpose, collectively we can take the industry analysis, economy analysis, and company analysis. Collectively, EIC is going to establish the intrinsic value of the security. What is intrinsic value? Why, as an investor, I need to know about the intrinsic value? Because the intrinsic values are the real value of such securities which are traded in the market. I'm just establishing the intrinsic value. Intrinsic value is not a book value, is not a market price of security. So you know that book value of security, how it is being established based on the existence of the firm, the retained earnings, the capacity of the firm over the period of time. It is going to calculate the book value of securities. It means the paid up capital plus reserves and surplus of the company together is going to use to calculate the net worth of the company. So the net worth of the company divided by the number of outstanding equity shares which can be traded in the market by the company can get the book value per share. So it is going to identify what is the internal valuation. It is, we call it as an internal valuation based on the books of accounts, the value of an asset, the value of equity share is being finalized. And the market price, the price in which the investor ready to buy and sell in the market. So it is based on the market about the trend it is prevailing in the market. Maybe a buying pressure, maybe a selling pressure which may happens in the market. Based on that, the market price is determined. Let's say, for example, if more selling pressure for that particular security that may happen, the price fall, price fall may happen for that security in the market. Let's say just opposite, you can take the buying pressure is more for that security, what we otherwise call it as a kind of the bullish trend is prevailing in the market. Subsequently, the prices of security which is increasing drastically, it is going to increasing in the market over the period of time. that is entirely differ is going to be the external valuation. So it is not neither to be a internal valuation nor to be a external valuation. It is going to be the in between of the book value of shares and market price of the security which is traded in the market. So the intrinsic value is in and around that particular price. If the market price is between the intrinsic value, those security can be appropriate to buy in the market. If those securities, the intrinsic value of that securities is very far away below that the market price, those security can be traded, sell it in the market, because that already overvalued that particular security in the market. So these are the basic things that going to be interpreted on this particular part of fundamental analysis. Let you can take the second one, the technical analysis is full of charting techniques can be used in order to know how the market is going to be reacted, how the market is going to be behave based on the previous price movement. So based on that, the market is going to be analyzed. That is what it is called, the technical analysis, using some statistical technique, using some charting techniques where it is going to be analyzed the movement of the stock over the period of time, movement of the security over the period of time. It can be predicted, it can be analyzed, it can be evaluated, the movement of the price over the period of time. So it is the different indicators can be used, like for example support points, resistance point, breadth of the market, about the advances and declines happens in the market. It means based on the buying pressure, based on the selling pressure, based on that the market is in bullish trend, market is in bearish trend. Market is in bullish trend, it means the prices are increasing for the consecutive trading days for that the particular security. Whereas you can take so in that, the kind of short selling happens in the market. Chart indicators. Chart can indicate the predict the movement of the market. What type of pattern is formed in that. Different way in which we can classify the charting techniques in the form of what type of triangular pattern has been formulated, or what type of the other forms which was formulated on the basis of chart. The different types of charting technique is being analyzed. Based on the charting technique, it is identified that the kind of the trend may be prevail in the market. Next, we can expect the same type of trend or the opposite trend maybe happens in the market, can be identified from the charting technique with a different resistance level and different support level in which it is being identified based on the market price. It is purely all the techniques that we are using here under the technical analysis are purely based on the market price. The historical price of the market is being used. The basic method can used like for example of moving average method is going to be the average price for the security for the 3 days, 5 days, 7 days, 9 days. Like average is being taken to identify the movement of the stock over the period of time. Like the other indicators, like for example the different indexes is being used. Moving average, convergence and divergence techniques can be used in order to understand the movement of the stock over the period of time. Relative strength index, the Dow theory is one of the important theory under the technical analysis. The Dow theory is being used. The three different way in which the market behavior, the market price movement is being identified based on the short movement, medium and long term perspective, it is being identified from the Dow theory, and different oscillators can be used for understanding the movement of stock. These are the basic introduction about the unit 3 for the fundamentals and technical analysis. So we'll enter into the concept of fundamental analysis. It is the method which can be used to identify the true value of the stock. That is what we call it as intrinsic value of the security. So the true value, it is neither to be the book value or neither to be the market price. If, for example, that the security can be traded in and around the book price, that the security can be classified as a undervalued securities, where it is being over and above the market price, or the market price is over and above this intrinsic value, can say it is overvalued security in the market. Normally it is to be identified based on the nature of security. Undervalued securities are advised to buy, whereas the overvalued securities are advised to sell it in the market. So, important points related to this fundamental analysis: the current price of the stock, which may not affect or reflect the actual value of the stock. The stock may overvalued or undervalued in the market. That is what the overvaluation and undervaluation. It is advised to buy the undervalued securities, where you have already bought a security. Currently, it is being valuated, overvaluated in the market. You can sell it in the market and book the profit. And it is like the fundamental analysis which can help the investor to study the health of the company in order to understand relatively the liquidity position, solvency margin, and the turnover and the profitability, marketability of securities can be identified. The financial health or the financial soundness of the company is being measured, and it leads to the actual value of the stock. Leads to arrive the actual value of the securities. I hope you know in the previous unit, the valuation of securities itself, there are different valuation concepts related to the equity valuation, debt valuation, preferred stock valuation, where you identify that how we can able to establish the intrinsic value of the security. So that intrinsic value, we call it as an actual value or a fair value of security, fair value of stocks in the market. And this is done through the various qualitative and quantitative factors are being taken into the consideration. Like for example, the fundamental analysis, the fundamental factors of influencing, those fundamental factors can classify in the form of qualitative and in the form of quantitative factors. Those qualitative and quantitative factors are like economic conditions, political situation, legal environment prevailing in the market. The taste and preference of the consumers who are in the market, the type of competition is prevailing in the market. Then you can take some factors, or we call it as the qualitative in nature, whereas the quantitative factors are like the financial performance of the company, profit generated by the company for the specific period of time. Then you can take, there are factors can be classified in the form of qualitative factor and the form of quantitative factor. Those qualitative and quantitative factors are primarily used to evaluate the nature or the price of the securities in the market. And the main purpose of this particular method is to identify the companies that are relatively or we can say the financially strong. We can call it as fundamentally strong. It means those companies which are backed or which are supported by the economic factor, which are supported by the industrial factors. Those companies we can call it as, or those companies we can classify as the fundamentally strong companies. And in order to invest on this company for a longer period of time, stay long with that particular company, what we normally classify the stocks into the blue chip shares, similar to that relatively strong, fundamentally strong, financially sound companies that we classified on those company. On that basis, we may classify as a fundamental factors on the fundamental values in which it is being classified. So there is an analysis, whatever the fundamental analysis is being carried out, in an average, there are the research studies which reveals that the contribution of economy-wide factors. What are the economy-wide factors? Like the macroeconomic factors. Even the government policies plays a vital role. The government-owned policies like fiscal policies, monetary policies. That the fiscal policies, how the government is concentrating for the different projects or different welfare facility to the public is being provided. What are the amenities the government plans to provide to their citizens is going to be the factor identified under the fiscal policy, whereas the monetary policy to strengthen the money value in the international market, to strengthen the credit policy of an economy, what are the steps are to be taken in order to finalize the different statutory reserves to the banks and financial institutions, the amount of funds held in the different financial institutions, where it is going to be identified in the part of the policies which was owned by the government. And the things are related to the development of economy measures in terms of gross domestic product, inflation prevailing in the market, and unemployment happens in the market over the period of time. There are certain those factors which should have an impact to determine the value of the security. About 30 to 35 percentage of value is being determined based on the economic factors. Relatively, the level of industrial factors, influence of industrial factors is somewhat low compared to the economy factor. It is about the 15 to 20 percentage the price changes happens through the industry. And like the company factors, company-wide factors are at par with economic related factors. High impact to the price is being determined in the market. That you can take it is around the 30 to 35 percentage of market price is being driven by the company specific factors like price earning ratio, dividend per share, retention policy of the firm, expansion, diversification, solvency position of the company. There are such things, such factors can influence the price of the security by 30 to 35 percentage. And there are some other factors are also having an impact to determine the value of the security. It's like the psychology of the people, sentiment of the investor, emotions of the investor towards the buying of security in the market. Anomalies. There are some market anomalies are also playing a vital role for determining the price of the securities in the market. And we'll just enter into the first category. What are the basic the factors which influencing for the economic analysis? It involves assessing or examining the topics or the issues from the economic perspective. That is what related to the unemployment, related to the inflow and outflow of funds to the country, which we call it as leakages, which we call it as injections and leakages happens in the economy, inflows and outflows happens in the economy. And like the growth rate of a country over the period of time, stability of the country, in terms trade balance of the country over the period of time, different parts, the different conditions of the economy is being analyzed, that we call it as involve the assessing of economy, and allows the investor to analyze the market from the big picture on all the way to down into the individual stock. That is what the EIC analysis is going to be. The broader is going to be the multi-stage approach. First, you can analyze the economy. Later, you can find out what are the contribution of industries towards the growth of economy. Those industry is being selected. With the industry, what are the companies who are contributing more towards the particular industry? Then the companies are going to be identified. With those companies can be evaluated in terms of its financial position in the market. So that's going to be the picture, overall picture for understanding. So it is going to be the process of evaluating. It is called it as a big picture. Is going to be narrowed down into the stocks. Is going to be purchased by the investor in the market. With that the thing, it is going to generate the amount of returns to them for a longer period of time. And by examining the economic numbers, one can be able to determine the current market strength, what is going on in the market relatively. So for example, some indicators, some quantitative indicators of economy, like for example of GDP growth rate, like for example of inflation in the market, like for example of percentage of unemployment prevailing in the market, about the per capita income of a people. These are certain indicators can used to determine the current market strength which happens in the market, and the investor can have a better idea what is going to happen in future for that kind of economy. So that going to be the part is going to be analyzed in the economic analysis. And the key economic indicators of the investors must incorporate while selection of the stocks. These are the factors like indexes. You know that index is going to be the measure of economy. Like you know about the stock exchange is a secondary market, where in the primary market the securities are being issued or floated in a different ways. It is in the form of initial public offering, or in the form of further public offering, or maybe a right issue, maybe a preferential allotment, maybe a private placement. Different methods in which the securities are issued in a primary market. Those securities can be bought and sold in the secondary market. So the secondary market, we call it as a stock market. Entire operations of the stock market is being carried out by the stock exchanges. So the stock exchanges, you can take in India, we have 23 stock exchanges, but now there are about 4 major stock exchanges there in India. With that, the 2 major stock exchanges are Bombay Stock Exchange and National Stock Exchange. Remaining stock exchanges are doing the functions of Bombay Stock Exchange and National Stock Exchange. Whether the Bombay Stock Exchange as well as the National Stock Exchange, they have the different indexes. Indexes are indicators of economy. Let you can take an example of benchmark index owned by the Bombay Stock Exchange is a Sensex. What is Sensex? Is a sensitivity index that included 30 major stocks based on its market capitalization. It is called it as free float market capitalization methodology. It means, what is free float market capitalization methodology? The outstanding portion of shares can be traded in the market is being multiplied with the current market price of the security. What is outstanding portion? It means apart from the holdings of security, maybe with the holding, maybe with the hand of central government, or maybe with the hand of state government, or maybe with the hands of the promoters holding, or maybe a HUF holding. There are the different holding patterns owned by the company. Apart from the holding, whatever the portion of security may available for the individual investor, those portion of earning, or those portion of securities, we may classified as outstanding securities in the market. Those outstanding securities, with that the base, it is called it as free float. It means those shares can be, or those securities can be available in the market. With the basis, the companies are arranged. Top 30 companies on the basis of market capitalization. So you know the formula for calculating the market capitalization. Market capitalization is calculated on the basis of current market price multiplied number of outstanding equity shares in the market. On the basis the companies are arranged, the first 30 companies are included the index called Sensex. Sensex started during 79 with the base points of 100. You know that the kind of growth happened for the period of time that you can take whether the 50 years, the period of time around the 50 years, a half decade or half century, a period of time, what the kind of drastic changes that happens in the market. Similar to that, the Nifty National Top 50 companies or the indexes owned by Bombay Stock Exchange, relatively or recently started. It's like 94, the index is started with the base points of 100. The relative growth, the tremendous growth happens in the market is being identified from Nifty. So Nifty and Sensex is not only the index owned by Bombay Stock Exchange or National Stock Exchange. There are a number of other stock exchanges, stock indexes are being owned by them to understand the performance of market, or specific performance to the industry is being analyzed with the performance of these. And like the other indicators like the gross domestic product. You know that what is gross domestic product? It means the value of goods and services produced by the country during the specific period of time. Let's say, for example, during this financial year, what is the value of goods and services produced by the country? How it is going to be evaluated? It means what is the contribution or the growth of services sector, agricultural sector, industrial sector is being evaluated. In terms, the gross domestic product is calculated. There is a method for calculating the gross domestic product. It is based on the expenditure pattern. First one is going to identify the consumption expenditure. It means the amount of money spent by the household for purchasing of goods from the market. We classified as the consumption expenditure. And what is a portion of money held in the form of investment? Investment is also considered as a future expenses. So it is classified as an investment expenditure. So the value of investment, and the country is going to involve, the companies are going to involve export and import related activities. So what is the trade balance between the export and the import is being identified as X minus M. It means export, the value of total exports minus the value of total import. What is the net value is being evaluated. And like the expenses by the government, whatever the expenses by the government in terms of providing basic amenities to the people, the different way it is going to be calculated. So these are the four different expenditure which happens in the economy, the way in which the gross domestic product is being identified, which we can denote it as C plus I plus X minus M plus G. C denoted as a consumption expenditure, I is an investment, plus X minus M is a trade balance, plus the government expenditure is being used to evaluate the gross domestic product, and the unemployment rate prevailing in the market, the amount of the population, literate population, the skill oriented population, with that the what is the level of the employment is being provided, with that the base in which the unemployment is being calculated. And like the inflation is prevailing in the market, inflation is about instead of buying the product at the relatively lower rate, we are going to buy higher price, pay higher price for purchasing the product. You can say it is too much of money is going to chase for too few goods from the market. I am going to pay higher money for purchasing very low quantity of product. That we call it as the inflation. Normally it is prevailing in the market. The different measures, the metrics are being used for calculating of inflation. In terms, it is going to be calculated on the basis of wholesale price index, consumer price index. It means the producer price is going to be calculated on the wholesale price index, where the retail price is going to be calculated. It means the total value of goods, the price changes are going to be calculated based on the primary articles or secondary articles. The total, it is not going to be calculated for the specific product, one or two product, or the specific product is not going to be calculated. It's a basket of products. The prices are going to be calculated. The price changes are going to be measured over the period of time in order to understand what is the amount of inflation is prevailing in the market over the period of time. And like the consumer confidence towards the market is being identified in terms of how much the consumer is willing to buy the product from the market, invest in the market. The activity of consumer is being the one factor is to analyze the economy. And like the purchase manager index is going to be the overall index is going to analyze about the purchasing power of the people is being analyzed. And there are the industry specific factors, can call it as it is sensitivity to the business cycle, industry life cycle analysis, study of structure and characteristics of an industry, the profit potential happens in the industry, or the major